By far, I think the largest economic challenge is financial illiteracy. People just don't know how to manage their money.
Not having accessible, affordable housing for a lot of Canadians poses a large number of problems, whether that's homelessness or feeling stuck in domestic abuse situations where you don't feel like you can economically sustain yourself by finding a house somewhere else.
So I think the biggest economic challenge facing Canada today is global competitiveness. I think Canada needs to do more in order to make sure Canada stays competitive on the world stage.
Something that comes to mind is housing. The housing crisis, how a lot of people just will not or will never be able to own a home in their life.
We need to be creating industries for ourselves. We need to be self-dependent and not dependent on the US anymore, not dependent on other countries.
Thank you very much. This is working. It's always that awkward moment at the beginning. Thank you very much, Julie, for that introduction. And just to clarify, I have not served or given advice to any prime ministers, and nor would they probably have listened. So it's a big honor to be on stage with both Robert and Shaun today. What we thought we would do is, this is kind of a two-parter. So the first part is we'll take about 5 to 7 minutes to let Shaun and Robert tell us a little bit about the report. Because it's so recently released, we will make the assumption that not everyone has read it from top to bottom, but I do recommend you do, because I think it is probably touching on one of the most, if not the most important economic policy issue that our country will need to look at and probably should have looked at, which we'll talk about as well. After we do that, there'll be 3 other folks that I'll introduce who will join us so that we can have a bit of a wide-ranging conversation about the report and its implications for all of us. So I didn't realize you guys were, the odd couple or the power couple, so I'm going to assume you have a good dynamic between you. So I'll just let either of you answer this. But I first, before we kind of get into the specifics, I would just love one of you to just explain the genesis of this, how you decided to focus on this topic and how you decided to come together to work on it.
I think we wrote the paper really for 2 reasons. The first is we thought we needed a richer, more textured debate about competitiveness. As many of you know, the country has been seized by these questions, particularly following the tax cuts in the United States. And we thought we could help, as I say, make this discussion richer, more textured, and more rooted in the economic trends that people here have been talking about for some time, but that have been neglected in policy circles. So that's the first reason. The second reason is we wanted to convey, we wanted to signal to the policy world that these issues need to transcend partisanship, that Canadian competitiveness needs to be something that has a long-term commitment that crosses party lines. These are not issues that can resolve themselves in one election cycle. The North Star that we're talking about is one that ought to guide policy making, whether by a liberal government, a conservative government, or some other government. And we hope that by working together on this project, by coming to a consensus both on our diagnosis but also our prescriptions, we can, as I say, signal to policymakers, signal to the policy community that while there are great debates to be had, the question of competitiveness, the question of scaling global firms in Canada is something that ought to be within the 40-yard lines of political debate.
Can I just add a short compliment to this? And this is something I feel very strong about. I guess as a citizen who looks up at the world, especially at the US right now, and look at the level of polarization in the politics, is something that I'm worried about. I think in Canada we have had a great political center where parties diverge, but there's kind of a middle ground where progressive, conservatives, liberals, even NDP can agree on some things. I do not want my country to become like the US. This is really important, and I hope that we send this message by working together. It's possible to find out middle ground. The real fact that Shaun and I didn't fight a lot about a lot of the prescriptions we came to write in this paper.
We only fought about hockey.
Yes. And he brought me to a Leafs game, imagine that.
Well, let's get in a little bit to some of the specifics of what you're getting at. Shaun, you're right that this report is about competitiveness, about scaling global firms in Canada. Those issues are age-old, I think, or at least as long as most of us have probably been following. What's different about this report is really honing in on a major boat that we are missing, which is the growth of the intangibles economy and its implications. So Robert, I don't know, or either of you, if you could just spend a few minutes just outlining at least the central arguments of the report.
Thank you. So essentially what we're trying to do here is broaden the conversation on competitiveness. And we're saying the global economy is going through a significant shift, which is to say that the intangible assets part and the intangibles in the economy is growing very fast. You look at market value and all the index, and the intangible assets part is growing. A stats we cite in our report is that for the S&P 500, which is an American index for the 500 most capitalized companies, in 1976, 17% of the ratio for intangible assets, the number was 17% for intangible assets. In 1995, it was 91%. We always say that, at the beginning of the century, this century, there was no Facebook, there was no Twitter, there was no Instagram, there was no Skype. Today, these companies are worth more than $4 trillion. As a country, we had to come to grasp with it. And it's not just a tech issue. We're not trying to say that here's this, Waterloo, Kitchener, intangible economy out there that we have to be really good at. It's really about merging the tangible with the intangible and making it more competitive and more performant. And I guess the thrust of the paper is to say, in Canada, we have a really good foundation, which is human capital. We do immigration well. We have an amazing education system. We have to use this human capital to build innovation assets and commercialize to make global firms, the next BlackBerries, and to make sure that with capital and all the ingredients, we commercialize these innovation assets. So intellectual property, data, brands, copyrights, this is the new economy. This is where the value of the economy will be going forward, and we think Canada should be, in a much better situation.
And I was going to say, Shaun, just last question before we pull up the panel. No, and it's probably to add to it, but would love just your assessment of kind of where we're at on that and a few of the key areas we should be looking at, and then we'll open up the conversation.
I think it's a great question. As Robert says, there's much in Canada's policy framework that represents strengths. But I think what we discovered as we worked through this process, through this exercise, is that it needs to be augmented, it needs to be refined, it needs to be reconceptualized in light of the trends that Robert describes. And I think of our function, in a way, as translators. These debates about the rise of the intangible economy and what it means for public policy are occurring in Toronto and Waterloo and elsewhere in the country. But I think our perspective, having spent time in government and in political circles, is that these debates are largely absent from the world of public policy. And so I think our hope is people may agree or disagree with our prescriptions, but hopefully we're able to translate these conversations occurring across the country to policymakers so that as we think about competitiveness, we're thinking about how to incorporate these trends and how we need to adjust our policy framework so that we're not behind the game, that we aren't being reactive, that we're actually ahead of the curve and creating the conditions, as Robert says, for Canada to be a leader in these areas. That's not something that's happened to date, and that's a comment across the political spectrum. And so that's ultimately this exercise of knowledge translation, of debate translation, I think is really ultimately what we've sought to do.
Great. Thank you. So what we'll do now, we'll transition to part two, and we have three wonderful panelists to join us, and who I'm hoping, who have been tasked anyway, with illuminating some of the issues and implications that your report provokes. So if I could just invite Craig, Laura, and Royce to come up in that order, please. I'll just speak a little bit about each of them. Alexander is the first chief economist at Deloitte Canada, and I believe you've been the chief economist at several other places before. So,
yeah, I can't keep a job.
Yeah, well, I was going to say you're a resident chief economist. Very long, over 20 years track record of providing forecasting and different economic advice to all of us, so I'm very keen to hear your reactions. Second is Laura McGee, who is the founder and CEO of Diversio, which is a tech startup that uses data analytics to help tech companies be more inclusive. She's also very active in women entrepreneurship and was recently named one of Canada's top 25 women of influence. Congratulations. And then Royce Mendes. Royce is the director and senior economist at CIBC, also one of the sponsors of today's forum, so thank you for that. He is the lead author on his department's foreign exchange publications and also a very regular commentator in the media, I understand, on economic issues. So it's wonderful to be joined by all of you. To keep the conversation going, what I might propose is that we just have a quick round robin with our three new panelists on stage. I would love for each of you just to take a few minutes, if you could touch on the sort of one or two things that you found most exciting or provocative about the report, as well as sort of one or two things that you found most troubling or sort of tough to digest or whatever it might be. And I think that'll help for the audience illuminate, the richness of this conversation. Craig, do you want to start as our chief economist?
I think Robert and Shaun are going to be successful. I mean, when I hear you say, the purpose of the paper is to raise dialogue about an important, critical issue facing Canada that we need to address in a nonpartisan way, and what we need is a long-term focus on competitiveness for the prosperity of Canada. And we have to avoid short-termism. These are all the right messages. In point of fact, we are at a crossroads in Canada. If you think about competition, competitiveness is really about what economists call productivity, but you can't use that word with Canadians because they think it means working harder or producing more with fewer workers. But in point of fact, since the end of the Second World War, 80% of the increase in the standard of living of Canadians came from higher productivity. And we're in a world today with aging populations and slow productivity growth that, in point of fact, the trend rate of growth in the Canadian economy going forward is going to be about half the pace that we had in the 1990s. And one of the things I worry about politically is if the standard of living of Canadians is only increasing at like 1% a year, it isn't going to feel like they're getting ahead. And boy, that could have political ramifications that we're not happy with. So I think that the purpose of the paper is absolutely the right one. I think they've picked up on some really important themes around competitiveness. I think one of the big challenges in the paper is how broad the topic is, because it's every dimension of competitiveness. And yet, in point of fact, almost every dimension almost deserved its own separate paper. So maybe this could be the introduction to your book.
Maybe that was the grand plan.
So, yeah.
Are there one or two things that you wish they'd emphasized a bit more than others because they're more important?
Well, the rise of intangibles, I think, was a really important thing to put a spotlight on. It builds on some of the narrative in the book, capitalism without capital, and that if you put these two products together, you have a pretty good understanding of what the challenge is. At Deloitte, we're doing a lot of work with companies, helping try to understand AI, machine learning, how to apply it against their businesses, how to harness its potential. And it isn't just about intangibles in the tech sector. We're really talking about the rise of intangibles in traditional industry and how you can apply this new technology to traditional industries. And so it isn't about just getting jettisoning the past. It's really about building the future, and I think that's the right message. I guess on the flip side, I mean, all the areas that I have some concerns are actually around the policy prescriptions, which is exactly what you get with policy wonks, right? So, I think the thrust is the right one. It's really the details of, okay, so what's the right policy prescription to address the central question that you're trying to tackle.
We'll leave that one dangling and come back to it. Thank you, Craig. Laura.
I think my favorite thing about what you guys have done, I actually thought some of the policies were quite creative, especially around the human capital and including different communities more, promoting upskilling in creative ways that, promote experimentation. But I think the role modeling that you're doing around bipartisanship is so important and powerful. And the role modeling that you didn't speak to, but I think is equally important, is how you've brought together, politicians and people from your own, working class backgrounds together with business. Because ultimately, it doesn't help us to have a divide. It doesn't help us to have animosity between all of these groups. We really, truly, we should be aligned. I think my biggest critique, and I shared this last night, is I think we missed a massive opportunity around getting women more involved in the economy and having women contribute to the rise of intangibles, to creating IP. And something I shared last night, I think RBC estimated the GDP impact of increasing women-owned businesses at, I think, $198 billion. And I'm sure everyone's seen the McKinsey report estimates the impact of parity at $150 billion. Like, those are massive numbers. And when you look at the kind of common critiques around, well, why are women only running 7% of at-scale companies in Canada? A lot of the critique is around, well, women tend to concentrate in the services sector. But something that the US is getting right is they are learning how to productize companies and areas and sectors that women tend to be really good at. So the services industries, and two of my favorite examples are the latest two unicorns, Glossier and Rent the Runway. What they've done, both women-led, women-founded, is they've digitized, in one case, renting clothes, and in the other case, applying makeup. And now they've created $1 billion in market cap in a very short period of time. And so I think that's an area, and there's lots that we can do as a government, to catalyze that kind of capital deployment, formation, and then accumulation. And I don't think that we're quite there yet.
Thank you. And Royce.
All right. So two compliments and I guess one critique, and I'll see how far I actually get. But I have to be honest. At first, when I was asked to do this panel on competitiveness, I was somewhat skeptical. The word competitiveness gets thrown around a lot in the media, but many economists don't even use the word competitiveness, to Craig's point. If they do, they actually mean something slightly different than what we generally think when we use the term competitiveness for companies. It means productivity. In fact, I urge all of you to go home and dust off your international trade textbooks.
I'm sure they're all right at your bedside.
Take a look at the index, and competitiveness won't be in there. That's because what we're really talking about is productivity. It's the difference between companies and countries. Essentially, as Paul Krugman points out, if Pepsi does well, Coca-Cola is usually hurting. But if the US is doing well, Canada is doing well. So I was therefore pleased to see that the paper and this discussion was not going to be some mercantilist investigation of how to pull our economy up by pushing others down. In fact, Robert and Shaun did a wonderful job of pointing out up front, I think it was page 12, that competitiveness is productivity. They used the World Economic Forum's definition of competitiveness, which is exactly that, productivity. And I think that set absolutely the right base for this discussion, because too often discussions about competitiveness get sidetracked by not understanding that it is productivity. The second compliment I want to give the two authors is the mentions of global cooperation. This is not a one-person race. Larry Summers, famous economist, recently pointed out that there is no gap in globalization more serious than the failure to prevent global companies from escaping taxation. The IMF estimates that roughly $600 billion in revenue is lost each year because of the lack of effective global cooperation in tax and corporate income. The only way to address this is through global cooperation, and I think Robert and Shaun mentioned that a few times in the report. And to one of the main topics of the report, the biggest companies that are evading global taxation are the intangibles companies. So those are the two parts that I thought were extremely strong. The one critique I do have is that the report generally focuses on the supply side of the economy or the capacity of the economy. But that leaves a gap, in my opinion, in the investigation. As Robert and Shaun point out, intangibles, concentration of market power, and unequal distribution of gains are having important impacts on capacity. But they're also having extremely important impacts on demand, specifically our ability to run an economy at a decent growth rate or maintain full employment without extremely low interest rates or fiscal stimulus. For example, in 1990, the 3 largest companies on the S&P 500 were Exxon, IBM, and GE, all companies that required vast amounts of tangible capital. Today, as Robert and Shaun point out, it's companies like Amazon, Facebook, Google. Robert and Shaun correctly identify that that leads to less capacity, but it critically also leads to less demand for everything from machinery, which is built in Canada, to construction workers that are sitting on the sidelines now because there's not enough demand. Supply cannot create demand. That's a proven fact. And in fact, the opposite is actually true. Inadequate demand can actually destroy supply. So if we don't address the supply problem, any initiatives or policy proposals that we put in place to try to lift supply could be destroyed by having inadequate demand. I just want to take this point a step further, if you'll indulge me, and draw on my experience as a former central banker. The economy is actually in a very dangerous position relying on low interest rates to prop it up. Why? Because the Bank of Canada has needed to cut interest rates between 4 to 5 percentage points in every recession. Today, we have less than half that ammunition. The fact that the Bank of Canada does not have the firepower to offset a recession is by far, in my opinion, the biggest economic threat to Canada over the next few years. I believe that Shaun and Robert's paper could benefit from a more fruitful discussion on the demand side, because I do think the proposals they cite, like government procurement and immigration, increasing population, which is both demand and supply, were extremely good. I think that is the right approach, but I would have liked to have seen a greater amount of discussion on the paper on demand. But in the short term, I think that's more of a longer term issue. In the short term, I really believe, and this is probably a little bit less for this panel, but for the whole summit of the day, the most crucial public policy initiative in the coming years will rest with the Bank of Canada in finding a framework that can adequately combat the next slowdown, which we are more likely closer to than not.
I'm going to let our authors off the hook for the Bank of Canada. But thank you all. That was a terrific, just laid out a whole bunch of issues. I don't know if you'd each like to take a minute just to respond to the panel. Just pick one thing, and then I've got a few more questions just to tease out.
Well, first of all, grateful that you read the paper. Now I know who did besides my mom. I think all points well taken. One thing we grappled with from the outset was how did we, as Craig says, capture this topic in a way that was accessible, in a way that contributed to the public debate, recognizing that there are so many lines of inquiry that we could have pursued, and so we're not defensive at all that it's inexhaustive.
It's good fodder for the book.
Yeah, exactly. If I could just pick up on one point, though, that Craig made, and it's something that we really tried to convey in the book, but it's worth emphasizing, is that the rise of the intangible economy that we describe is not a binary choice. We're not trying to create a straw man here between a public policy framework focused on sectors like natural resources, agriculture, and so on, versus tech. In fact, as the Barton Committee has advised Minister Morneau, where Canada can be a leader is in areas of agriculture and energy. And these industries and these firms are leveraging the intangible economy as part of their businesses, and so this isn't a binary choice.
It's not a new economy, old economy dichotomy.
Precisely, and so that's why I think policymakers from across the spectrum even if their predisposition is to conceptualize the economy along natural resource lines, for instance, it would be a mistake to think that this conversation isn't relevant to them. And as I say, that I think was a big part of what we were trying to convey in the paper. This matters to everyone.
Well, Canada, one of the sort of debates I had in my head when I was reading it, which is this a, how much is this a policy problem? How much is this an industry problem, and the lack of, the firms in Canada who are leading on some of these issues, either because they're in traditional businesses that are transitioning, or because we just don't have a lot of tech giants that are domiciled here and headquartered here. I wouldn't mind just hearing, and I don't know if I'll kind of open it up to the whole group. We've got a lot of smart people on the panel. But will, all the right policy in the world solve this without the companies, acting and investing in the right ways?
Well, I'll just note that in our report, one of the emphases we put on is the low level of business investment. This is historic in Canada, but this is very problematic. And this is not something public policy can solve by itself. The level of investment in R&D, for example, on the business side is very weak. You take out companies like BlackBerry and Bombardier, and you don't have much. And this has to be turned around, obviously, to grow global firms. We had this amazing discussion last night at one of the dinners about how you grow global firms, and there were a lot of smart people having their own theories. The interesting thing for me is nobody really knows what's the problem. There are many problems, we know that. There's not one thing that public policy can solve. There's the entrepreneurial issue in Canada, the fact that a lot of our sectors are protected, they're not open to competition. Maybe that's also a pointer. But obviously, in the intangible economy, the point we're trying to make is that the innovation assets we are creating, intellectual property, data, copyrights, even the brands that companies have, once it's time to commercialize them and grow into global firms, it's where we have a wall in Canada. We have somehow to move this psychological and intangible wall. Otherwise, I think we'll have a lot of difficulty going forward.
May I just answer really briefly?
Yeah, and I'll get everyone to be punchy. The problem with only having 30 minutes and 5 people is the math doesn't work well.
I'll be brief. Yeah. Of course, public policy isn't the full answer, but I don't think I can impress enough the need for policymakers to broaden the way we think about our policy framework to account for these trends. Just one point in this regard. Robert mentioned in his introductory comments about the data with respect to intangible assets on the S&P 500. The truth is, Alison, we couldn't get that data for Canada.
Yeah, this was an interesting point in the report, that no bank, one bank did it as a favor.
That's right.
But the lack of tracking of this in Canadian business was a eye-opener to me.
And in public policy circles.
Yeah,
I think
that
the fact that these data don't exist is a signal that we are behind the game. And so obviously, I think public policy needs to recognize this and adjust accordingly.
So Laura, I want to ask you a quick question about sort of the firm level challenges, given that you're working with a lot of technology companies, and then we'll come back because there's a ton of policy issues that we'll try to cover in 12 minutes. You're working with a lot of technology firms right now. Can you talk a little bit about some of the challenges that you're seeing that they're having to be bigger players in the intangible economy rooted here in Canada?
It's a great question. It actually, I think, relates back to the question you just asked. Is this a policy problem or an industry problem? So I'll speak from this perspective. We are an intangible company. It's all IP is basically all we do. And I'll tell you what keeps us in Canada and what might ultimately cause us to leave. So I think the reason that, most of our clients actually are global. We are solving a global problem. It's not specific to Canada. And quite frankly, companies in the US tend to adopt more quickly. And so it's always been quite attractive for us to relocate to New York, where there are more headquarters, and the sales cycles are shorter. excuse me, the reason that we have stayed, I would say three things. Number one, from a policy perspective, credit where it's due. Canada makes it very attractive to grow startups within this country. So there's a lot of government support, not just capital, but also the people working, for example, in IRAP are fantastic. Secondly, I have to give a shit, like the Canadian corporate community is very tight-knit, and I think it is tragic that there is this growing perceived divide between, populism in the corporate community, because that's not been my experience. I think the people that I work with who are, kind of buyers of ours are really supportive. I would say, so there's, I think, a policy angle to, protecting and growing Canadian companies, but there also is a significant industry angle. I would say what might ultimately cause us to leave is, again, going back to the incentive to continue to maintain IP in Canada just isn't there. And I think in a lot of cases, it is a bit of a wasted investment that we invest in, starting from talent to universities.
And is that because there's not people to buy you for high enough multiples? Is that, why is the incentive not there?
Yeah, that's one piece of it. And then again, I mean, there's no, requirement when you get this funding to continue to maintain your IP in Canada. And so if you're a global firm and your clients are all in New York or your clients are all in London and you kind of run out of market in Canada, frankly, it does make sense to relocate. And then there is a capital piece that, the best companies, I completely appreciate there's a lot of growth capital available in Canada. It does not value companies the way that Silicon Valley investors value companies. So if you're running an A-list startup with an A-list, kind of value proposition and metrics, you're going to go to Silicon Valley and get a 30% better valuation, probably from, some more globally connected investors. Not always, but sometimes.
Nice transition here to some of the policy questions. So the government puts a lot of money into investing in technology and startups, and we heard from, in bigger companies too, like we heard this morning. But interestingly, some analysis was done that shows that over half that money is actually going to foreign subsidiaries here in Canada, not to Canadian run companies. When asked, the minister's press secretary said, well, it created a lot of jobs and led to a lot of additional investment. Does it matter if public policy is domicile neutral, as long as the activity is happening in Canada? And Craig, maybe I'll let you just start with that. If you don't, you look like you're,
no, actually, it's not.
Or are there other levers they should be looking at?
When I read the paper and I was going through the policy recommendations, I agreed with about 90% of it. But the chapter that is the section that's the most innovative is the one around intangibles, and it's actually also the area where we have the biggest policy challenges around how do we get this right? Right? How do we get the governance structure for data right? How do we deal with the privacy issues? So for example, Deloitte had a workshop with one of the provincial governments. We brought in 6 or 7 different ministries. We were talking about applying AI, machine learning, big data to their problems. And boy, they got really excited about all the things you could do. And then all of a sudden, the conversation came to a dead stop, because suddenly it became very clear that under the current legislation around privacy and data sharing, the ministries couldn't actually share the data between themselves, so all the potential was not unlockable. Right? And so it's like, okay, so we have a regulatory issue here that we need to figure out how to overcome. And then the other dimension which came up was this idea of, okay, so should foreign-owned companies benefit from public funding to do IP development in Canada? And you think about that, and intuitively your answer is going to be no. The Canadian taxpayer shouldn't be subsidizing foreign companies doing research in Canada. But then at the same time, I was suddenly struck by something, which was I've actually participated on a large number of government roadshows to go out and convince international investors to come and locate in Canada. And one of the key things that gets brought up and actually pitched is the generous shred tax credits. That, if you're a Swiss company and you're thinking about doing some more R&D work, how about doing it in Canada? Because, man, we've got this really generous tax incentive. And you know what? That's actually part of your pitch. So, and then I was thinking in terms of, the overall report talks about, the old classics, and it talks about taxation. And it doesn't say much about business taxation. But I used to pitch Canada on, come to Canada, because we've got the best talent, and that is our strength, and that resonates in the report. Come to Canada with free access to the largest economy in the world, the United States. Okay, we probably have that.
I don't think that's going away.
And
so
then,
are there any walls in the plan?
I'd like the legislation to get through Congress. Number 3, we tax capital at a lower rate in Canada, and we've lost that advantage. And now if we say, okay, well, should we restrict access to these tax incentives, which we're actually using to pitch to international companies to locate in Canada and do R&D in Canada? Is that going to be much of a deterrent? Is it going to be add to the difficulty attracting capital to Canada? So again, I get the underlying objective, right? The core objective is to develop an innovative ecosystem in Canada. The question is, what's the right policy framework that delivers it?
Just on that, Alison.
Yeah, and because we have 5 minutes, I'm going to throw 2, I'll let you respond, but then there's 2 other quick questions where maybe we do a rapid fire, and Royce, you've touched on one of them. And it's how do we respond to the FANGs, to the big guys, to the Facebook, Amazon, Googles, Netflix, et cetera. You mentioned sales tax. I think that's important. I guess I'm interested, should we be starting to have a real conversation about taxing these companies in the same way that their competitor firms are taxed? And the other one is about a national data strategy, which I've heard thrown around. And what needs to be done so that individual Canadians actually are in a position to really benefit from the new oil of data and the intangibles. So maybe because we have such a short time, I'll let each person kind of make a comment, and then we'll have one wrap-up question.
Honestly, it has to be a global solution to taxing these corporations. No one country is going to be able to do it because they don't exist in any physical space. They exist in cyberspace. So to tax them, it will have to start, at least in my opinion, with G7 countries, OECD countries, developed nations, and we can include then the emerging markets and massive countries like China. But we have to start working together on this. It can't be one country going it alone. And this is actually a pretty important initiative over the next few years, because at a time that taxes are being lowered and we're trying to attract capital in, we're also seeing government spending increase, and we're on the precipice of massive increases in government spending related to aging demographics. We need to find ways to raise tax revenue, and this is one that I think is relatively low-hanging fruit because they should be taxed.
Yeah, and we'll maybe just go down the line with any or other comments on the policy. Sorry, Roberta.
Yeah, so I'll answer your first question. How do we compete with FANGs? And maybe it's not what you're asking, but I think it's critical. We need to grow our own. So we need to grow our own global champion. We need to get 1 or 2 more unicorns. We need to create that kind of capital formation here. I think the way to do it, and it goes against our instinct as a democratic country in Canada, is we need to double down and focus on our strengths. And that, I said this last night, we need to stop spreading the peanut butter and funding everyone's kind of pet project, and really focus around areas where Canada has a global competitive advantage. And I really like what you said earlier around, listen, it's about bringing the tangible together with the intangible. Canada is a leader at ag food. Canada is a leader in the resource sector. So I think if we can, put the ingredients in place to help evolve those companies to be more scalable and more competitive, that's where I see the best use of our resources.
So one of the things that came up in the book was the fact that the intangibles creates a winner-take-all or zero-sum type game. And I think this is an important dimension, and it does lead to the concentration that we're seeing in terms of market dominance and market power. I suspect that the way you tackle that is through competition policy. The other thing I would just stress, just as a final comment, is we, as a country, we actually have to figure this out, right? This goes back to my earlier comment that if we don't become more innovative and more competitive, we are not going to have outcomes that Canadians are going to be satisfied with. And when I look at Brexit and the rise of Trump, the report makes the case that we need to have long-term vision on competitiveness. I actually think that we literally are at a turning point. We actually need a more a greater sense that there's a crisis. Because we really need to fundamentally make a difference on this for the long-term future of the country.
I mean, if we don't do something on this, the invisible hand of the market will do the work for us. The Canadian dollar will weaken. We will all become poorer in the global sense. And that's the way we'll become more competitive on the global stage.
Last question to our authors, and it's really on how we move forward. You said at the very beginning one of the reasons you came together was because it needs to cross party lines. We've got at least 3 or 4, but maybe we'll deal with at least the three big political parties who should all be preparing their platforms right now. Going back to the 2015 platforms, none of them mentioned AI. None of them talked on these issues. So curious what advice you would have on ways that as we look to really having a multi-party consensus on this, the political parties should be thinking about these issues and how they should move forward.
As Shaun has said, the problem with our politics, our modern politics, is all about short term. It's very problematic. We have to change that. I just want to say in closing what Greg said to me is really important, is this sense of urgency. We are a very complacent people in Canada. We take things for granted. We added good, we still added good, but we live in a very tumultuous world where US and China are fighting for technology, the 5G, who will actually rule the next wave of economic development. We have a southern neighbor now that is very disruptive, that we cannot take for granted. We cannot have 75% of our trade depending on the US. We hope that policymakers of all parties will grasp this sense of urgency and working on long term. Obviously, we are humble in our prescriptions. We know that it's not one thing, one silver bullet, one action that will solve everything. But we need to be diligent and resilient about this. This matters for our kids' quality of life.
We're being screamed at to please end the session, but Shaun, last 2 sentences to you.
I would just say, I don't think the way to catalyze progress and change is to warn about a crisis. I think it's to push our political class, push our policymakers to be ambitious, to pursue an opportunity. And I think we're on the precipice of this opportunity if we make the right choices today. And hopefully our paper helps that conversation get started so that we're ahead of the curve instead of behind it.
Well, thank you. And thank you to everybody for, for being punchy at the end. And thank you, Julie, for letting us run over.